Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make a ton of money on the internet. Loaded up discussion today. We've got gold hitting new all-time high at $4,200. BlackRock CEO Larry Fink says BlackRock is seeking a larger role in tokenization. So we'll talk about that too. And we will get into the Binance news, a variety of news related to Binance. One, announcing a $400 million Together initiative. We'll break down what that is, and a little bit of back and forth drama about centralized exchange listings, how Coinbase were involved, and Hyperliquid's entry into that debate as well. So we'll discuss all of that on today's show, as well as the usual price action on crypto and NFTs. I'm delighted to say I have Legendary and Bread in the co-host suites with me. We're ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. The market is incredibly risky. We do not know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Wednesday. It's the 15th of October. How are you doing? How are you feeling, my man?
GM, it's another day where the gold price is going up. So I am very, very happy because my gold bags are increasing. But not only is that the case, I also placed another bet on Myriad if gold will go to 4.2K before it's going to drop to 3.8K, which shout out to Super Saiyan. He's the one who pointed that out in the Telegram chat, because I would have missed that otherwise. And it did resolve in my favor. So it is a good day. What is also the case is that the yield basis went live on Binance. I think the tokens are distributed. They should have started trading now, but I didn't have a chance. Literally started trading 9 minutes ago to see what this one has been doing price wise. So okay, 74 cents right now. There we go.
Which is, we don't know. 740 mil, 7.4 bill. Who knows?
780. Yeah, 780 mil FTV. It's the typical 1 bill supply.
Pretty nice. Win for the pre-salers. I think, what price was that, Ledge? Was it 200
cents? Yeah, I got in at 200 cents. Everyone on Legion got in at 200 cents. So
there we go.
It goes as 140 on the pre-markets. You could sell there. Obviously, now it's still a 3.5x or almost 4x if it's 4x at 80 cents. Still a good win.
No problem with that. Good stuff. Bread, how things going, man?
Good, now that you let me in, MFers. People checking the chat. I'm like, okay, I read, and I'm like, man, it's getting kind of late. Like, what's going on with these guys? Did I forget something? Is there another chat?
Where did Legendary put the original link? Did you send me the link today?
Yeah, because
I don't actually always use the link you send. I come straight here.
You DM'd me, B, in our DMs. You went, GM homies, here's the doc for today. And then they just wait, that was sent to me private.
So Bread hasn't even seen the doc for today.
I did put the doc in the chat, but I didn't put the StreamYard link because my brain is hardwired to only post one link.
Okay, so now I've mentally prepared who I should be disgruntled with. Cool.
Yes, I set it off. I set off the chain of events. I apologize.
Yeah, things are good though. Yeah, as you were, I think I mentioned on Monday, whenever Ledge was just like, we're just talking about like theses and like how this stuff is going to play out, and I put out that long on gold back then. So like, yeah, cool. Like gold going up is like it's going to be the outcome for everything. Like regardless of the way the train gets to the station, like gold going up is probably going to be the thing. So we took out a little bit of a long, so that's good. And yeah, I feel like my mental is back in place to where I can like start putting on trades again. I was still a little rattled from the Friday thing, and I think I was making some emotional trades. So yeah, we're back out here. We're playing the game again. Having fun.
That's cool. Legendary's got a pretty crazy article to share in his section on the general roundup and the market and what people are writing about gold. It's like genuinely crazy. I thought I had to ask him if it was real or not. So we'll discuss that.
You know that word, Bread, once we come to that article. I learned a new word in the English language by that headline.
Okay.
Yeah, it's a good one.
Onomatopoeia.
One reflective question, Brad. You said you would like trading a little bit emotionally, or you got liquidated a little bit over the weekend. Obviously, you've been generally trading pretty well. I would say.
I was up like 40% of my overall bag, like over the course of 7 days.
What would you say now that you've had like a few days to settle, like after the weekend? Prices have kind of stabilized. Things are going a bit back to normal, at least. Any kind of reflections on how you entered those positions, and then how you kind of work through your decision making after as well?
Okay, so you're talking about the ones that got liquidated, or all the ones after where I was trading emotionally?
Maybe that little bit after, actually, because fine, look, sometimes unforeseen things happen. What are you going to do? Sure, there's things you can mitigate your risk, but they happen. But the after part, sometimes people can make it worse. Sometimes they can take the right precautions. How did you navigate the aftermath?
Yeah. So I mean, like the navigating the aftermath was like, you're questioning all your gut instincts and you're trying to predict the next thing. I know that was actually a lot of the stuff that I kept trying to say in the modern market chat of like, all right, guys, we have to let's think about second order effects. Like always what comes after right now, and try to force myself down the path of like what's to come, and like searching for opportunities. That's where we called out like gold, with which Legendary like bid into, which obviously turned out to be a great call. And like ultimately that's what again made me end up bidding on gold on Monday. I was trying to think of just like, okay, long term, like bodies are going to surface, like all this stuff is probably going to trend down. Like the risk appetite is dried up for basically everyone. Like there was people in the chat that were like, oh, I put out a long on, whatever, like meme coin or like, long tail asset. And it's like, God, like thinking about my own emotions, like I don't want to buy anything that is like beyond an Ethereum, beyond a Solana right now. Like I just like it feels scary. I feel like now that's already kind of passed, and I'm already starting to get like a little bit of like, okay, like things feel somewhat stable. And I see a lot of stuff on the timeline of just sophisticated traders that are like, every time you have a pullback like this is always the opportunity. And it's either you buy in now with a little bit of risk and get a larger upside, or you wait for fundamental things to kind of stabilize, right? Like right now, the big things like bodies are going to surface, and like you can either wait for people that got blown up to like become known, and for us to like really understand the relationship between Trump and G with like I think they have a meeting at the end of the month still. So like we still have a window of him to be able to do whatever he wants with a couple of tweets to send the market up or down rapidly. So it's kind of still risky, and you could wait for those things to structurally get in place to then like, okay, things are there. We can like stabilize and begin to participate again, or you can do it now and have higher upside. And it's like the big traders are buy now and go. Yeah, I don't know. That didn't really answer your question, but like this is kind of the things I've been listening to and trying to how I've been positioning myself is like, okay, I'm starting to dip my toes again. I'm still not comfortable to do like anything sizable or really closely or risky, I should say, that like can risk getting liquidated on a single tweet.
Yeah. Okay. No, I think that's super helpful. Sometimes just stream of consciousness of thoughts as trying to make sense of like those really, really big movements. The one thing you said, which I definitely resonate with, or is like another note in the back of my mind, is the pullback was so severe that it probably was worth the bid right there and then on almost anything. Like it was just too severe across the
Did you
board.
act in the severe moment? Because like I was literally
asleep.
at my computer. Oh, that's right. Because we were actually like calling out, it's like, bro, his eStore's printing right now.
Yeah.
Because I remember it, and I'm looking at it, and I was like, I didn't bid at like the pico bottoms, and like that's the moment where like I froze, and I should have clicked a few buttons probably. And like so then after that, you're like, okay, it'll probably bleed back. Like it didn't, right? Like I had some shorts that printed like, I don't know, like 150% on my position because it was ridiculous. And I could have clicked the button right there, but in my mind, I was like, okay, it'll settle and then it will ultimately bleed back down. But like it didn't. It kind of recovered. It stabilized probably about 30% higher than that moment. It's like some traders, Legendary is one of them. He's clicking buttons, man. He bought gold at the pico. Like shit's getting weird, and he acquired a bag. Whereas like I want to train myself to be able to like act in those moments a little bit better.
But that was honestly, that was the only thing, to your reflection, both B and Brad. I didn't have any worry about my stable coins. That was the main thing. So I was like, comfy in my USDT, USDC. So I wasn't too worried about anything going on. Obviously, it was like a catastrophe, but I wasn't like fearing for my on-chain life, basically. As when USDC depegged, I was like, do I buy the USDC depeg or do I switch
did that.
everything
Yeah.
together? So there I was like, I don't know what to do. So in this case, I was like somewhat chill, but I didn't have the gut and stomach to bid on any of the altcoins. The only thing, as Brett said, I was like trusting to bid was gold, because I knew worst case, I can redeem my kilogram of gold off chain and be like, yo, give me my bar and it's gonna have that value. But I didn't have the stomach to bid anything on the altcoin, because it's such a weird feeling. Like you see Atom, Pump, all those things on Binance trading at like literally zero. You have no idea what's going on. So maybe the thing is, put in like 1K, put in 10K, whatever amount, doesn't matter to you if you lose it. But that instinct didn't work for me. My instinct was like, oh, Brett posted gold, that's depegged. I can get that through on Hyperliquid for 20 bucks a transaction. Let me buy all of that.
Yeah. Well, that's the difference, right? Like you bid a depeg versus like a value depreciation.
Exactly.
Like everything else, value got wiped and like is still getting wiped and like it can go to zero. And people thought it could legitimately continue to go to zero or whatever. Whereas gold was simply disjointed from the actual price that we knew was extraneous to the system and was safe. Like assuming like it's the same thing as bidding the stable coin. Like I bid USDC whenever it got down to 88 cents, whatever, 3 years ago. I was like, okay, it's either going to go to zero, in which case like the whole market's fucked, or like the dollar is going to be there, right? So okay, so I'll get the 12%. In hindsight, the RR is probably not there because like my upside was capped at 12% or whatever it was, but like gold upside's not capped, right? It's its own asset that's doing its own thing.
I completely agree with that. That was the exact conclusion I was going to draw, Brad, which is the depeg on gold is different to the other things going down. Like it's the depeg on gold, the normal gold in the
zero.
real market.
Gold is not going to go to zero. The system pegging it maybe go to zero, but if you trust that, you're fine.
Yeah, so there is that trust element, which is important to recognize. So I guess on Hyperliquid, you're buying Tether Gold at the moment. The XAUSDT, is that the one? No,
it's XAUT0.
XAUT0, sorry, that's the one. That's the ticker on Hyperliquid. Or you can go by PAXG, I think, which is not on Hyperliquid, but that's your alternative gold on-chain way to get exposure. So yeah, interesting reflections. I thought it was helpful. You know, sometimes these things come to you a couple of days after the moment. So glad we got into that. Right, we got a lot of stuff to talk about today. Some interesting happenings. Let's start it off as usual with the price action on the majors. We've got Bitcoin up 0.5% to almost 112K. We've got ETH up 3% to just under 4.1K. Feeling like I want to press the short button again there now that ETH's back at 4.1. I'll have a think on that. BNB is down 1% to 1,180. XRP is up 1% to $2.50. Sol is up 4% to $200, 203. And Hyperliquid is up a few percent, up 5% to $40 again. And Sui is up a couple of percent to $2.80. Getting into the meme coin side of things, stuff is generally green, I would say, but just a touch. So Doge is up 1%, back at 20 cents. Pepe's up a couple. Pengu's more or less flat. Bonk is up 4. SPX is up a couple. WIF is up 5. Useless is up 20. One thing I would say on this, Fartcoin's up 4. Rect is up 4. One thing I would say, like in these kind of big movers at the moment, I have noticed there's some very different things which are moving now. You know how, every now and again the show has to respond to the change in the market. We didn't always used to go down the meme page, for example. Now we do, because we went through a meme season some time ago, and now we always end up reading it. But I'm not sure that that's the best place to always go to. Even like the big movers today, just listen to these. Yay Finance up 369% to 630 mil FTV. Chain Opera AI, I don't even know what that is, up 115%. Is this real? 16 bill FTV. I don't know if I wrote that wrong. Open Campus, the Edu token, up 31%. XPL up 18% to 48 cents. That's bounced back a little bit, 4.8 bill FTV. And Zcash still going strong, up 16%. I think it did dip a little bit, but back to $266, so up 16% today. So, I just, people think that memes are the biggest place that you can go risk on and the biggest place to, make more money. But, that was the case for a period of time. And I'm just noticing at the moment, we go to the memes page and they're tracking the majors. Like, okay, Pengu's up 2%, ETH is up 3% or something. Like, okay, is that really psychologically the thing that we think memes are anymore? Or are the bigger moves taking place in other places? That's my instinct. But getting into the headlines themselves, we're going to talk about gold. Legendary's got an awesome article to share on what's been happening there. We've got the BlackRock CEO, Larry Fink, saying BlackRock is seeking a larger role in tokenization. I think that's important too, to track that. And then finally, got all the stuff going on with Binance, Coinbase, Hyperliquid, and Binance's Together initiative, which is $400 million to deploy back into users and also to institutions. So we'll explain what that means in a bit too. Legendary, is there anything going on the NFT side that we need to keep on top of?
We have on screen this beautiful GLHFer selling for 13 ETH. That is a nice one to see. This also being a good friend of ours, good friend of the show. And in terms of the other NFTs, nothing too crazy, to be honest. Pudgies are flat. Moonbirds are up 1%. Apes
These moves on the 7 days though, pretty big, aren't they? Like,
obviously, yeah, that's still down. That is still down massively. 20% for the pudgies. 10%.
I saw Rahim sharing that information the other day, where like the leverage in some of those big NFT collections was huge, specifically in Pudgy Penguins, down 20%, because I guess there was just way too many loans. The price goes beneath the loan amount, and then people just keep letting go of them, right? So a bit of a liquidation cascade, I think, there.
The only green exception to that, which is nice to look at, are the chimpers. They are up 11% on the day. They're up 14-ish% on the week, and sitting at a 0.84 ETH floor. That is quite nice to see them being moving against the trend.
Love it. Shout out to Chimpers, also good friends of the show, Insight, Joey, and Timpers. Love seeing them do well. Good people, good builders, always trying to do things the right way. Great to see them going against the market in a positive way. What else do we need to get into? So getting into the rest of the roundup, we have a few bits of information. We got Mega ETH reportedly conducting a public ICO on Kobe's Sonar platform. We've got MetaMask announcing a Polymarket partnership, which will allow users access to prediction markets in their wallet. Binance denies it charges any listing fees for new tokens, as accusations to the contrary come from the Limitless founder. Maybe we'll wrap a little bit of that conversation into the main headline on Binance today as well. We've got Sky launching its first risk capital token, where you can earn 40% from stability fees paid by USDS borrowers. Tria announces a $12 million pre-seed and strategic funding to build a leading self-custodial neobank. I like this narrative in general. I think a lot of people are going to be trying to build the neobank. Obviously, Plasma came out first. Really swinging, huge valuation, huge excitement about it. But I think we're going to see more attempts at this in general. And then finally, liquid staking protocol on Hyperliquid Kinetic announces the final K-point snapshot has been taken. The final distribution will take place tomorrow. So that'll be interesting to see the K-points be concluded. Doesn't necessarily say that means that airdrop will come tomorrow or that the tokens will go live tomorrow or anything like that. So we'll have to keep an eye on that. I know a lot of people, if you're holding hype, you're probably holding K-hype. At the same time, it's kind of a no-brainer, right? You just hold the K-hype, earn all these points, and then get airdrop this liquid staking token. So, sorry, the Kinetic token. So let's see. We'll have to see what further news they bring out tomorrow. But that's the roundup, guys. Before we get into the main stuff today, Brett, what is catching your attention?
Yeah, obviously, like there's a Mega ETH in the headline. I'll just say, like, for everyone else, just trust stuff from the main account. Like, all information that we can disseminate at any given time will come from the official Mega ETH _labs Twitter handle. So just put your notifications on. Yeah, that's the big thing for me. Outside of that, like, honestly, and I'm trying to think of like where I've been going on the market and what I've been trying to watch. I've been degenning a little bit on this in the Solana trenches. They feel like they've been firing back up. I hit a big one. That's, I'm not going to call it out because I'm not comfy enough to say tickers on the show that are like sub X, but like things feel like they're heating up a little bit. I don't know how I feel about, and I never bridged over to BNB to like go and enjoy that. I didn't catch any of the stimmies that I saw were thrown out over there. I think they gave out like a couple $100 to a bunch of people that meme coined. But other than that, I don't know, man. I feel like it's amazing how I'm getting whiplash from everyone being so bearish as things go into zero to like all of a sudden on Monday, we're all ready to like look at the leverage slider again and get back into things. It's amazing how quickly that stuff can come back. And I still think structurally we have like things look good. So yeah, the risk appetite is back up. Maybe we could talk about stocks a little bit. Stocks have also been doing good. And I feel a little more comfy there because the returns are about on par with the things that we're searching for here, unfortunately. And they're not going to go to zero on a DPEG from CZ priming us. So like, that's kind of a nice thing to have. Yeah, looking at the S&P. But yeah, nothing specific catching my attention outside of that.
Yeah, man. I mean, this bigger this bigger set of ideas I've been having recently, which maybe a number of people are thinking about as well, which is like, what's the point? What's the point in being in this specific market when something like the weekend can happen, when simultaneously you have stocks basically outperforming, you've got gold outperforming anything normal as well. Like you've got to be, I think you've got to be, you know, you already have to be quite far down the risk curve to be in this industry anyway, but to not recognize that stocks are doing as well, or even if as well, and gold is just performing in the way that it is, and not to put something in there to take some off, especially if you have a bigger portfolio, I think would be wild right now. So, you know, we've been talking about that a lot. Ledge, did you want to come in there?
Yeah, because we talked about like insurance and, you know, leveraged positions and similar returns in the stock market. The thing with the stock market, which is nice, and I don't know if many people know this, is that you have, say, take the S&P 500, you have what is called a circuit breaker. That means if on a given day, there's 3 levels to that. If the prices drop by 7%, trading halts for 15 minutes. If the S&P drops by 13%, trading halts for 15 minutes. And if the S&P drops by 20%, trading halts for the rest of the day. So they won't allow you to dump your S&P 500 to zero within a single day, because trading will be stopped long before that, which is also why you have obviously like, you know, 2x leveraged ETFs for S&P 500, MSCI World, etc., which have a way lower liquidation chance, because you simply cannot have the S&P drop more than 20% on a day, because trading will stop once that happens.
Do you yeah, that's pretty funny. It's reminding me of, I'm sure this is unconnected in many ways, but on football.fun, when we went, I think you were on holiday then, Ledge, in the summer, they actually, I supported this personally. They had this mechanic where in high volume trading, they basically, they didn't say you can't trade, but they created this mechanic where you could, that the fees will get so high, like the tax you'd have to pay to get out of that position in that really high in that kind of extreme volatility was really, really high. They also capped the amount that you could actually take a position in a player, for example. So you couldn't just buy 100% of the supply of the best football player in the world, because that would be bad for the market. So they were taking a bit more of like an active role in managing both the holder base and, you know, on the buy side and on the exit side, just like trying to make a market that is not going to be as volatile as it is. And, you know, in some ways that's why we're in crypto, because it is volatile, but maybe as it matures and you're trying to find product market fit in these kind of consumer products, you're going to have to take some off it in some way. So I'm kind of jumping around there, going into you know, consumer products and stuff, but let's get into the main headline, because headline is about gold today. Everything else, as you say, crypto is kind of recovering, just treading water here, trying to decide which way it wants to go, I think. but gold is still moving up, all-time high at 4.2K. And you had this interesting article to share. But what do we need to know here, and what's going on?
Yes, absolutely. Let's get the gold chart on screen. As you said, gold is trading at all-time high, crossed 4.2K, went even a bit higher than that, is currently trading at 4.2K, which means it's up another 1.3% on the day. And there has been a super interesting article on the Financial Times with a new word for me to learn, which is titled, "Central Banks Have Been Buying a Squillion Tons of Gold Promise." I learned that a squillion is basically a gazillion. For some reason, Financial Times did log me out on desktop, so apologies for that. I will have to grab my phone and go through some of the things which I mentioned in the article by phone without being able to share my screen on that. It's really interesting, really educational. I didn't know quite a few things in there. So,
okay, while you're just looking for that, Legendary, I'm just going to define squillion for the people who are listening in. And when Legendary told me this before the show, I said, "Wait, are you joking? Like, is that really a thing that was written in the Financial Times?" And the answer to that question is yes. And literally, I just if you Google the word squillion,
which I did,
the definition,
it's
it's not even a number. It's just an indefinite, very large number.
Yeah, it's basically a gazillion.
Yeah,
To the article, Financial Times is making the point: gold continues to soar because of reasons. One of the most cited reasons is the central bank buying, and that is the interesting one. They say the demand for gold by central banks remained at record highs even back in 2024, accounting for more than 20% of global demand. But the thing is, if you look at the central bank's reported gold holdings, they've only increased, quote unquote, only by 228 tons over the last 12 months. 228 tons, to put it in context, is about 40 African bush elephants. But they're also saying it's not that much in central bank purchase terms. In fact, 228 tons puts it in the bottom quartile of gold purchases over the past 5 years, 10 years, and 15 years.
Sorry, can I just pause you there, Legendary, for a sec? Did you just tell us how much it weighed in elephants?
Yes.
Why did you do that?
The article said it, and that's a thing. Isn't that the thing? Like you Americans, Brett, you put everything in football fields.
Mhm.
That's what I also did when I was like writing articles in journalism. Whenever I wrote something and it had a large number, my former boss was like, "Okay, put it in perspective. How many Olympic pools is that? How many football fields is that? How many elephants is that?"
I respect it. That's how I made my way in this space. You draw the comparisons. Like you have to give people the like contextual differences. Yeah.
So just to recap that, 228 tons of gold being bought, and that is a relatively low number. So why is everyone saying central bank demand for gold is so high? Because this is only the official reporting part. There's also an unofficial, basically unreported gold demand by central banks. And if you look at this says the central banks have added 800 tons of gold, so almost 4 times the reported amount. So why is there this discrepancy, and why are there unreported gold purchases? Because the official central bank gold holding numbers that we have also been reporting on the show sometimes, they come from the IMF, but reporting to the IMF is voluntary. And according to the European Central Bank, for example, the Central Bank of Russia stopped reporting its gold purchases 1 month before the sanctions were imposed, although it is expected to have been a large purchaser in 2022 and subsequent years. So basically, at some point, central banks, especially after the Ukraine war started, especially some of the larger buyers like Russia, stopped disclosing and reporting their gold buys to the IMF, to the International Monetary Fund. And that's okay to do because they are not bound to make that report. And this is why, if you check at some of the websites there is one, I think I have one up, that are sharing these statistics, you won't find those numbers that impressive because all of them are just relying on the IMF numbers. But there is a pretty good metric to look at and approach the unreported demand for gold. And that is now, even for central banks, 4 times higher than the reported one. And the main driver, a main driver of that is the conflict, is the war in Ukraine, Russia, that also has basically led to the fact that central banks, especially Russia, wanted to add more gold. And for different reasons in different countries, that they did not want to report these purchases anymore. So I found that to be super interesting because it clearly shows that central banks are a massive demand driver for gold, but that the strategy is also changing, that it's becoming a bit more covert in terms of how they're adding and purchasing gold, and they don't want all of their moves and all of their gold stack being tracked at the same time.
Interesting. Very interesting. A couple of points coming out of that. I think it's pretty telling that the demand for gold is just insane right now, and that's obviously happening. The maybe a separate interesting point is, we're talking about privacy a lot in our space now, right? The demand to retain privacy, the demand to shield your transactions, to have some kind of privacy over your on-chain activity. And it's interesting that that's manifesting for much larger players in this specific way as well. I think it's pretty obvious that everyone does, when it comes to the financial stuff, want to retain some privacy. But maybe a secondary thought is for me to give further thought to the on-chain privacy narrative, whether that's Zcash or whether that's something else at some point. I do think the industry is far more mature now. And say, for example, Zcash always pumped at the end of a cycle, which I'm not saying that's not part of the reason why it's doing it now as well. But now that the industry is so much more mature, there's a chance that the things that it stands for is more important now, and the industry is more ready for it now than it might have been before. So that's my kind of tangential point on the whole gold stuff. Brad, you want to sorry, Ledger, I was going to come to you first. Any comment on that? And then I wanted to come to Brad.
Yeah, I have a bit more of a cynical take there, because you have central banks who want to impose a CBDC, who don't like us transacting in crypto, in Bitcoin, but at the same time, they do like to keep some of the stuff that they do clandestine and secret and not report all the numbers. And I kind of find this a bit ironic.
Yeah, I mean, that was the other point I was going to make. The idea that all of this data, whether it's the gold numbers, whether it's the media reporting on it, it's very, very hard to trust all of these numbers. The one price I think that you can trust is the chart going up. Who's buying the gold? Who is revealing all the gold they have? I don't know the answer to that, and I wouldn't necessarily believe all of the stuff that you hear when it comes to such an important strategic asset. Brad, coming to you here, and then let's hear from Funky, who has his hand raised, and Oxy, I believe.
Yeah, I'm actually excited to hear from the crowd, so I'll clear away for those two.
All right. Well, I think Oxy's hand is raised at the moment. Funk, just raise yours again if you still wanted to come in. Oxy, welcome to the stage, my man. What's your thoughts on this gold conversation? How are you playing it?
Yeah, thanks. Yeah, so I guess something I would be really interested to see is if someone comes out with maybe a stable coin that's pegged to gold, or backed by gold rather. So like one thing that is an inherent issue with stable coins is that it's typically backed by treasury bonds or just straight up USDC. Obviously, there's delta neutral like backed stable coins as well, which is a little different. But Tether, USDC, typically are backed by fiat related like units or financial systems. So it still kind of has that underlying issue where it's continually being debased because anyone can print more treasury bonds, anyone can print more money. And we've seen like Circle being one of the largest buyers of treasury bonds or federal federal bonds just in general, to the point where it's the size of countries. You know what I mean? So I guess I would like to see maybe at some point, I don't know, this might already be a thing, like a stable coin that kind of rivals that level of demand, which I think would be very high. But for the gold, from the gold side, because if what we're talking about here is true, where there's going to be a flight to gold as the monetary systems continue to be debased, or fiat systems continue to be debased, it feels like the Bitcoin and gold are the only two assets that really make sense to be backing these stable coins.
Yeah, gold specifically. I do think appreciate your thoughts there, Oxy. Your point about stablecoins is pretty important, right? And I think a lot of people have already caught on to the plan from this current US administration, which is to proliferate stablecoins across the world at the expense of probably local currencies to keep the dollars in the hands of people, which creates the proxy demand for the treasuries, which might be being lost elsewhere, right? If other people don't want to hold their treasuries anymore, well, at least you can get the stablecoin in their hands and you kind of make up for it. If they want to take this industry, the stablecoins, to trillions of dollars, which is the intention, then that creates the demand for the treasuries, which is going to be lacking because all the other people are selling them and reducing and buying other stuff instead. So, and I think if anything, that just continues the grand cycle that we are in right now. Which, to be honest, look, I know that we always want Bitcoin to be the thing that is going to move, and maybe it's lagging gold. But it's happening right here, right now. Like the trade for gold is happening right here, right now. People are exiting fiat; they're going into gold instead. Bitcoin has actually been just in this range for how long now? If you actually think about it for a second, I'm just pulling up the chart, Ledge. I don't know if you could do something similar. Like
it's been
here
chippy
for a long
choppy for a
time.
while now. Yeah.
Brad, did you want to come in?
No, I'm just saying it's been choppy for a while now. Like we saw the whale, the short whale closing his position yesterday, and I assumed like it was going to use that to pump it a little bit. But like even with that, it's still just been chopping back and forth. There's been plenty of sellers to counteract him getting out of the what it was like $400-something million position.
Yeah. So I mean, we were as high as where we are now, or more or less, back in June. We were pushing up towards here actually back in February as well, before that big dip on the tariff stuff after. So we've kind of been in this region for a while now. And in that same time period, obviously gold has completely sent. So it's something to keep in mind. And I think, you want to have your Bitcoin gold proportion in your mind, or start to figure it out, or at least have some. Oxy, your hand's raised again. Give us your final take before we move on.
Yeah, maybe just to clarify. I think maybe when I say Bitcoin, I tangentially mean energy, like the energy trade. So like the thesis that Bitcoin, Bitcoin valuation is tied to energy because you can't create more energy without and so on. So maybe that's more so what I meant. But yeah, I hear your point for sure.
I mean, I definitely like it when you broaden it out to that. I've seen uranium ETFs go completely insane in the last few weeks. Something to keep an eye on. Legendary, I believe. Shout out to Joe actually in the Telegram chat, who shared a German weapons maker, and I believe we were actually talking about the exact same one like 1 week before. I don't know if you can pull up that chart, Ledge.
Let me get Rheinmetall up on screen.
Like
very, very beautiful chart. Rheinmetall is currently trading at 1,800 euro, which is almost 2K USD. Basically, before the war started in 2022, that was a stock that was trading under $100, and only slowly really climbed over the war years in Russia, Ukraine. But the thing that really fostered Rheinmetall's growth was when the EU and especially Germany started to increase military spending, and that going massively, obviously, into Rheinmetall's order books. And then you had like this very quick climb from under 500, from 485 euro back in October 2024, all the way to 1.9k euro until May 30th. So like that growth, that explosive growth happened within basically half a year, and with a almost like 2-year delay after the war started, because in the first 2-year war years, the stock quote unquote only did 5x, but didn't go as crazy as it did from the second half of 2024 to now.
Yeah. I mean, obviously it would be better to have been in this beforehand, but I guess the point, the point is still there, which is the other stuff in the markets now are offering very, very similar returns. And this is the point of like thinking about how to concentrate your bets moving forward in a market where other things are doing pretty nicely too. Brad, final take here, then let's move it on.
Yeah, like, so I sympathize with that. The hard thing for me is that that's not where my domain expertise is. So like, as I start to continue to wade into that stuff, I enter, I don't know what I don't know situation, which I'm not totally comfortable with. In this domain, I know what I don't know, and I feel like I have a really firm grasp of like where the edges are, how things are perceived, et cetera, et cetera, et cetera, how the rest of the market values stuff, right? Because you're always trying to like anticipate how other people will value these things. And I feel like within our bubble, I know I can see where the ball is going in a lot of ways.
Sure.
And I just feel really in tune. So for me, like, there's also like, that's the other element that it doesn't really, like, yes, the charts are sexy, but like, it's like the normies coming here and they're buying cat coins. Like they don't understand that is fundamentally different from buying Ethereum, right? Or, Solana, whatever. Right. I can sit here and look at it and go, this dude is redacted, but like, maybe that's the edge I can potentially have over there is I don't overthink things, which is my typical problem in a lot of places. So I don't know, like, it's just, I want to put that out there. There's like, numbers are appealing.
It's a great point. Having your domain of expertise is certainly important for a period of time. I think the best way, if you wanted to do it, is like you edge out. You don't just go all in, be like, screw crypto. Crypto's done. It's been chopping around for ages. Forget this. Robotics looks great. I'm going to go all in there when you know nothing about robotics, right? That's not the way to gently start to get some exposure to robotics. I definitely agree with you there. It's like, if you think a new industry is interesting, do some research, start to explore it, maybe, and you take a slice of it, you stay in your domain, but you take a bit of a slice and you learn some more. So I like that way of approaching it. Okay, pretty holistic conversation there about what's going on in general. Let's get into the couple of pieces of news. I'm gonna deal with one pretty quickly because I don't think it requires a huge amount, and then we'll get into the Binance conversation, which Brett is going to take us through. So the second headline was just BlackRock CEO Larry Fink eyeing a bigger role in tokenization. He said that the digital asset market, including stable coins and tokenized assets, will grow significantly over the next few years. He's kind of been consistent with this message for at least a couple of years now, or at least a year or so, especially as they got on the ETH bandwagon and are kind of pushing that as the place. Or they're certainly very, very happy to be pushing the tokenization message. The only additional thing that I thought was interesting in these set of comments is that he considered that BlackRock would have a bigger role in it event. Very just like off the cuff comment. I don't know specifically what that meant, but that they're kind of considering ways to continue to grow their role in the market, and people considering when people start to doubt about the tech or whatever. I think the tech is certainly being appreciated and adopted in that respect. So that's just the quick heads up. Brad, unless you have any comments on that part specifically, do you want to take us into this two-part maybe news? One is Binance in this kind of new $400 million initiative. And then the second part is the whole fallout on the timeline on Binance listings, Coinbase chiming in, Hyperliquid coming out with a tweet. What do we need to know here about what is going on at Binance?
Yeah, I might need you guys to give me some context on the Hyperliquid stuff. But I mean, the general thing is that Binance came out with a $400 million Together initiative, an industry recovery and confidence rebuilding plan. And TLDR is that it was trying to use a bunch of funds to compensate people that were affected negatively by recent market events. Who they targeted and what, like, you guys can read the article for that. But the general sentiment is just that they're funneling money back into to people who were affected. And the industry backlash is just that, one, Binance itself was targeted as potentially the culprit behind a lot of this stuff. A lot of things pointed to this recent crash being a Binance-led venue-specific depegging of several assets. We covered it on the show a few times. And so everyone's like, well, Binance probably profited billions of dollars from this recent event. And they just go, we're sorry. And then they come out with this initiative, which is a fraction of what they stood to gain from having that actual market event. So a lot of the FUD you saw on the timeline was just that, hey, they're doing this initiative. It's going to a lot of people. They're always about supporters and lifting up users. And like, that's the narrative that they're spinning. And everyone came back over the top and said, you guys are extractive and you guys are just like throwing back some shekels after stealing billions of dollars from everyone and potentially nuking the entire market, like / industry. This coincides with Limitless or Try Limitless, which is the prediction market that did a recent raise on Kaido. And they were propositioned from Binance on getting a listing, and they did a post. The founder of Try Limitless did a post that disclosed basically all of the conditions that Binance had asked for to get.
These are the alleged conditions. Alleged
conditions that Binance had asked for.
I'm just being a lawyer about it.
Yeah, no, it's right. He said he didn't sign an NDA, and like he showed screenshots. So like, but take it at your own. And it was just, it's a lot of money. It's 10% of supply. It's $200,000 retainer. It's blah 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 blah. A lot of this stuff.
I've just shared the tweet in the chat. It might be helpful to just for people to get the context and just go through this for a second, Brett. So I'll go through it and then I'll come right back to you. So this was the specific offer in question, which has caused so much kind of Binance came out and denied it entirely, and then everyone was kind of a lot of consternation on the timeline about whether this is right or wrong, and then actually a lot of backlash against Binance, to be honest. So the offer from Binance was 1% airdrop on day one for the alpha listing, 3% further airdrops in 6 months, 1% for marketing at Binance full discretion. These percentages are obviously like of their token that they need to give, that they need to hand over. $250,000 security deposit, 3% reserved for BNB holders, $200,000 worth of tokens at MFN price for Binance affiliate marketers, and then $2 million BNB security deposit for the spot listing. So overall, quite a large portion, which I think a number of people, we saw Mike Dudas come out, prominent VC at the moment, kind of corroborating, saying this is, multiple people have kind of confirmed this is roughly in line with what Standard. They have seen also.
Yeah. So there's that. And, so that's been the big pushback. And then you had mentioned the Hyperliquid tweet. So I was just reading over it. And it's just calling out that Hyperliquid for doing a lot of the same listing process that was called out here from the Try Limitless founder is just, it's permissionless and done on chain and verifiable and, all the fun words that we like to say in this space. The pushback would be like from industry people is like, oh, but Hyperliquid is still closed source, small validator set, all that, like, which is valid relative to the rest of blockchains, but it is still like massively better than the black box that is a centralized exchange. So, I think everything is relative, and I think that it is important to say, like, yes, Hyperliquid's claims are true. The stuff is verifiable. You even saw it with the ADL stuff that came out of the liquidations, right? There were people that were going through, pulling out the block explorers and showing that, oh, these are the ADL prices that were actually hit for all the traders on Hyperliquid. And, you could just have a node and download the information and check it out and verify it yourself. Whereas with Binance, no one knows. It's all one-sided reporting, very similar to what Legendary was talking about with the gold purchases, right? Binance has the ability to reflect or surface only the information that they want to surface, right? So they can say, these are the liquidations, these are when the ADLs were hit, and there's just a lot of it all through their API. And it's been a known unknown secret for a long time now that most of these exchanges misreport a lot of their information because you can't verify it. It's all closed source. So while Hyperliquid isn't the most decentralized thing, it isn't the most permissionless thing, it is way more permissionless and decentralized than a centralized exchange, and performs, actually better than centralized exchange did in a lot of these cases in recent events.
I like it. Excellent summary. I want to share two things that CZ and /Binance posted in response, and then actually move the conversation forward to be like, okay, well, what's the learning here, or what's the thought process moving forward for these people kind of getting in public arguments with each other? Like what's the learning from that? So the first thing I would say is CZ shared this post, which he said would be an unpopular post. Ledger, I'll just put it in the chat. Oh, you've got it already. It would be an unpopular post, which I think then goes and kind of confirms potentially listing fees. Says if you're a project complaining about listing airdrops or fees, don't pay it. And I've actually always been of that opinion.
Same.
In some ways, which is it's their business. I think for me the thing is like, look, if you charge, just tell people that you charge. Like you don't need to charge people and then tell people that you don't charge people. I would actually respect it. It's like, look, you've built the business, you've built that moat, you've built all those users. What's the cost? Like that's business, right? You can't just get distribution for free usually. So, you know, what's the cost? I don't think it's entirely foreign to anyone to like monetize your flow or your distribution in that sense. So, okay, it's a business. Having said that, obviously Hyperliquid are going the other route, just listing things about on what I guess they perceive as merit, and therefore taking a lot of their activity, right? So there's clearly a benefit in doing it purely meritocratically and not monetizing in that specific way. So, you know, there's some other points he made here, but then I think the bigger question, which is more helpful for people planning moving forward, is what do we think about the state of the market, the state of the industry? We've spoken about BNB season always being like towards the tail end. This like argumentative, quite juvenile, people attacking each other on the timeline. I feel like this again is stuff that happens towards the end. This is not like calm people going about building. This is like, no, we're locked in, we're in a bit of a battle here, and actually it's like spilling over a little bit. I feel like I've noticed this across a few verticals as well, where people are being a bit more difficult. And I think the reason why I think this type of behavior is more towards the end of the cycle is because people get more stressed when they think it's about to be over. They get more stressed when they think my chance to make a certain amount of money is closing. The window's closing. The bull market's been going on for 3 or 4 years or whatever. And now I'm going to be stressed. I'm going to be agitated with people. I'm going to make it difficult for people, not intentionally, but it's just like, it's what happens towards the end. That's my learning from last cycle when people's behavior changes. I think it's kind of a little bit of an indication of that. I don't know what you guys think on that. That's my idea. What do you think?
I like it. Probably makes sense. You know, you see people making money, you see the cycle progressing, and then you lose your patience. On the discussion itself, I also agree with, you know, CZ's point. Like, if you don't like it, don't pay it. Period. If Jeff from Hyperliquid says, you know, if you don't like Hyperliquid, you're welcome to trade somewhere else. Yeah. Everyone's like, oh, cool, such a cool founder. And CZ says the same. And everyone's like, fuck him. He's like criming everything. So I don't know. The hate for Binance in this space never ceases to amaze me. And I'm the last person to come out and be like, Binance are the angels of the industry. But they're operating a business. They're not operating a non-profit. So it's their right in term to charge whatever they want to charge. And if they ask for 50% of the token supply, they can do that. You don't have to pay for that.
Yeah, you have to say no. You have to say no as the founder if you think that those are mercenary terms, right? You've got to say no. You've got to go elsewhere. You've got to figure out a different way to do things. Brad, final take here before we close out.
Yeah, it's just a reflection on my own, how I interpret this stuff. And I see CZ, I think he sounds like a nice guy. Like he's kind of cool. Like I've seen him on some interviews. He seems like a humble, kind of plays aloof, dumb, whatever. And then I see people on the timeline like, oh, he's the wolf in sheep's clothing. Like he's doing this to lure you in and then stab you in the stomach with a fucking knife. And I'm just like, I don't know if it's me just like giving everyone the benefit of the doubt and looking at that and being naive and like understanding or not understanding that people are very, very ruthless and they do deploy those kind of tactics. Or if like, I've been in that position where I have been that person just like, guys, look, man, we're just trying, we're doing the thing, whatever. And they're like, oh yeah, really, bro? You sure you're not doing X, Y, and Z to like do max extract and all this stuff? I'm like, yeah, bro. Like it's just that simple. We're trying to do this thing and it's hard.
Yeah. Yeah.
So like,
and this is not an overarching defense, right? We don't know all the things that they do, obviously. But to your point, that is kind of funny because you're right. Like he kind of appears quite nice, and
just use the DEX for the first time a couple of months ago. It's like, yeah, man, does seem kind of crazy to me, but like still, it's just like, yeah, maybe he's just like that, like chill uncle. I don't know, man. Like
that's so funny. Final take, Funky. I saw your hand was raised. Give us a final take on this conversation before we close up.
your points notwithstanding, B, I think we're very good. I just wondered if it's more the psychology of the long, if it's a cycle or not. Like you guys have talked about in the last few weeks, just how much of a grind it's been, right? Like on everybody, because it's just like we expect some kind of blow off top and it's a super cycle, whatever. And so people are just agitated in general, right? But yeah, I mean, maybe it's that playing into it as well.
I 100% think that's part of it, man. I think that's part of it. I think towards the end, people are agitated and tetchy, and they think the window of opportunity is closing and closing and closing, and it is. Like on a relative basis, obviously the window is smaller than it was 2 years ago, obviously. And so that is going to have knock-on implications for the way people behave. It also is going to have knock-on implications for the way people build. And especially the people who are more ambitious, maybe they have to do things in a rushed way. They have to push a bit harder. And so one of the risk mitigation things me and Legendary were talking about, it's like, touch wood. I think the industry is way safer than it used to be. I'm not saying it's perfect, but from a smart contract perspective, and again, touch wood, like hopefully things stay fine. I'm not suggesting it's perfect at all, but there's definitely been improvement in the last few years. But I'm saying now, as we get to the end period where people are reaching and people are trying to push faster, people are trying to get your capital into their smart contract and farm their protocol because everyone's farming at the same time, because everyone's raised at the same time, because everyone's trying to get their TGE out at the same time. It might be a nice time to be like, all right, guys, I might just take a bit of a hiatus here from trying to farm every single one of these things that's coming out, or you be hyper selective and be like, okay, this is the team that I think is doing the best. I'm going to put X amount in there. But there's too many things coming out now, guys, and we don't know who's building it. There's clearly a bit of a rush taking place with everyone trying to go to market in Q4 right here, right now. So definitely something to keep in mind. Ledge, final reflection on that final point, and then we close.
Yeah, who's farming who is really becoming the question. Very much agree with everything you said.
Who's farming who? Okay. Maybe just play around with that in your brains over the next day or two. We'll be thinking about it too. And that's it for us for today, guys. Thank you so much for joining. As always, just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, live on X video, and YouTube. You can catch us on Apple and Spotify podcast too. What you can do to really support us, if you would like to, head over to YouTube. If you don't subscribe, please press the subscribe button. If you haven't liked us or followed us on Apple or Spotify, please do. It helps the channel. It helps us continue to grow our reach. I was very pleasantly surprised when I saw our numbers of how many people was following us on Spotify the other day. I had no idea. We hadn't been really tracking it aggressively, but we appreciate you for being with us on any of the platforms and supporting us across the board. So thanks so much for joining us. We'll be back with you same time, same place tomorrow. Have a wonderful day. We'll see you tomorrow. Bye-bye.